Hi everyone, welcome to the Sumsub channel for professionals in law, compliance and technology. And today we have a guest for a talk. It's Barrow.
Barrow is a financial crime fighter and also a long-standing celebrity in the money laundering world. He's been coaching and consulting AML-teams for decades. Nowadays, he co-founds the Dark Money Files, an exceedingly popular blog and podcast on money laundering and also wider financial crime issues. Graham investigates cases on how dirty money enters the financial system and absolutely phenomenally describes the schemes in his blog. In particular, he took part in the Danske bank story, one of the most high-profile investigations worth $234 billion US dollars.
Facing the largest money laundering scandal in the history of Europe.
So this is a gigantic incident, and I know that Danske Bank really suffered a lot from this incident.
Yeah.
Who are the AML investigators that really uncovered this together with you, and how it worked out? And can you please provide details? It's very interesting.
I was a bit later to the story, but effectively between 2007 and 2015, Danske Bank branch in Estonia had what was known as a non-resident portfolio. And it's had about 6,500 accounts there. And over the course of those 7 or 8 years, as I say, 235 billion went through those accounts. There was a gentleman who worked there. He was actually an English guy. His name was Howard Wilkinson, who noticed one particular account had extremely large daily credits going through it. And it was an English company, although it banked in Estonia, and it was actually owned by a Russian company. And the people who controlled it were in the Seychelles. So that's a very interesting arrangement that a Russian company would appoint Seychelles companies to run their company, but it was a UK company that banked in Estonia. It's not the most obvious choice. But when he looked at the UK company, which you're allowed to do, you can look at their filings, he saw that they were actually claiming they weren't doing any business at all. So he raised an alarm inside Danske Bank, said, well, this isn't right. And I said, oh yeah, we'll look into it. And a few months later, when he checked again, they'd filed some amended accounts. Said, oh no, we're not dormant, we're turning over £45,000 a year. It's ridiculous. They're turning over about $40 million a month. Felt that this was quite serious and nobody was taking any notice. So ultimately he left and was paid off.
Being named as a whistleblower in a case involving dirty Russian money, it's not a good place to be.
And somebody, and I'm not sure it was Howard, but somebody then decided to leak this to I believe the Estonian regulator. And at some point, those papers also made their way to a Danish newspaper called Berlingske. And they asked me if I would help them from a technical point of view to analyse some of these bank statements, because they wanted to be clear it really was money laundering and not potentially just straightforward business. And I looked at the bank statements and said, no, it's money laundering. Nobody runs a business like that. So, the set of statements I had were only for 13 months for a brand new company. It was only 3 months old. And $1.2 billion went through this account in 13 months, brand new company, which had no website, no internet presence. And yet it was trading with, I think at the last count, 60 different countries around the world it was trading with, in building materials and computers and children's clothes and all sorts of stuff. And so all of the red flags were there. So I was able to say, yes, this really is money laundering.
I can see that the general, let's say, idea that you are having dark money usually are going from the poor countries to the rich countries. That's usually how it works. What if money laundering is normal? Like it's just a normal money flow from poor countries to rich countries?
I probably wouldn't say poor countries to rich countries. I would probably say less developed, because a lot of the countries that generate these funds are not poor. What does tend to happen is that huge sections of the population remain poor while others become very rich. It's very easy to point fingers at other countries and say, oh, look how bad you are at managing your corruption or whatever. But it wouldn't happen if places like the UK didn't provide a very safe and secure and, frankly, welcoming home to all of that money. So if you couldn't buy all that lovely property in the West End of London or in Hampstead or in Monte Carlo or in Miami, there's not much point being corrupt if you can't enjoy the fruits of your corruption. So this is not one country bad, one country good. This is all countries together need to work to stop this from happening.
What do you would consider like the typical points of taken the dark money from? Let's say, like the typical countries currently that are exporting their dark money to the UK, to the UK and to the US. But I guess the UK would be the most typical destination.
It's mainly coming from what you might call emerging economies. So these are relatively recently liberalized economies. So that would clearly be former Soviet Union. It would also be China and other of the Southeast Asian countries who have moved away from outright communism or outright autocracy or dictatorships into what looks like a more liberal economy, but without transparency and without a fully democratic process, that government approach, that allegedly democratic approach, can be easily usurped by the men in power, and it is always men. It just is always men in power. There is a psychology here as well, Tony. If you've lived, let's somewhere like India or China, if you've lived in a country where you're reasonably oppressed, you've always been poor, you've never had access to money, and suddenly you find yourself in a position where you do, it takes a very particular sort of person to say, I'm not going to enrich myself with this, I'm going to enrich my country. It's very easy for us to say, oh, but this is immoral, it's just morally bankrupt. Yeah, but that's because we haven't lived their lives. I'm not defending what people do, but you need to try and understand it. What we should have in place are systems and controls that make it incredibly difficult for them to do anything with that money, but that's not the case at the moment.
For example, let's say small Chinese shops or small, let's say Pakistani shops that are accepting only cash, and you have to think about like where this cash is going. How do you feel like these types of instruments for money laundering that are existing actually in rich countries, in developed countries?
I think that's an important conversation to have, because in some respects it's easier to identify. But if you think about the sorts of money that flows through a Chinese restaurant or a corner shop from somebody from the Indian subcontinent, in absolute terms, it's relatively small amounts. And I think we need to have a grown-up conversation about what is it we're trying to control. Is it the people, the numbers of people, or the volumes of cash? So if I look at Danske Bank in Estonia, $235 billion flowed through that Estonian branch of Danske Bank in 7 or 8 years. No one is really quite sure where that money came from, and no one has currently stepped up and said, actually, that was my money and it's legitimate and I can prove it. It is still unprovable. I'm not expecting anyone to do that anytime soon either. So, how many Chinese restaurants and Indian shops would it need to process $235 billion? Well, it's more than there are in the world. We distort our economy. We make life very hard for lots of small businesses by making them do huge amounts of paperwork to get access to the financial system. And yet very rich people don't have to go through any problem at all. Everyone wants their business because they'll make a lot of money from it. It's a very distorted approach at the moment, and it's not working properly.
Let's look into, for example, let's say corruption perception index, which is very important element of the anti-money laundering scheme of the world, and like one of the first place actually was Denmark for a lot of years. Maybe now it's second place or third place. New Zealand is there. Estonia is very high in these indexes, etc., etc. But when we look into, let's say, a Danske Bank incident, okay, so this is a Danish bank working on Estonian territory. Both countries are extremely good in terms of corruption perception index. But still, this is exactly the territory where this situation happened. It's not Russia, it's not China, it's Europe and very good countries of Europe with good reputation. How does it work? And if this is so, then why do we need this corruption perception index? Maybe it doesn't work?
The important thing to realize about the corruption perception index is that middle word, perception. So it's not measuring corruption. It's measuring the perception of corruption. And actually, it was done for a very specific reason, which is the internal systems and controls within Denmark are looking to see whether they have transparency and whether people believe that their government is corrupt or not. And it's been rather put to use that it was never intended to be used for in the first place. But I do think you raise an important point, and one that's worth discussing, is that there is no point looking at any one particular country and trying to ring fence that country and understanding its risk. That's ridiculous, because these networks are composed of massively multi-jurisdictional operations. So it's pointless looking at one country and saying, how does it work? It's the interaction between those countries. So we have lots of measures. We have a thing called the Financial Action Task Force Mutual Evaluation Report. But again, that only looks at the internal controls. It doesn't look at how that country operates with other countries. So the UK, the best mutual evaluation report ever granted by the Financial Action Task Force. It's very political, but also partly it's not looking at how we export problems to other countries. It's just looking at our internal issues. So, we provide these companies that are used all over the world to launder money, and we provide a home for laundered assets within the UK, but neither of those really figured very prominently in the mutual evaluation report. So our measures for looking at the effectiveness of the anti-money laundering regulations are just deeply flawed.
Especially given the fact that yes, these mutual evaluation reports, they're very important, of course, and I know that countries that are getting good reports, they are very proud about that. I know that, for example, Russia and Belarus are very proud of their reports, and in fact, there are even stories that some of the Russian officials there inventing the ranking of countries based on mutual evaluation reports, even though they do not really exist, but they kind of like creating this based on the points that are getting from the reports. Also very interesting and peculiar issue. Legitimate economies like the US or European economies, are they going to legalize crypto and to regulate crypto? Just as, for example, you probably heard that Panama is recently accepted crypto, and El Salvador, etc. But of course they did it because they didn't have any other choice, because they have a very poor economy, etc. But what do you think about the destiny of crypto in legitimate economies, developed economies?
Well, let me answer that slightly sideways. I was actually reading yesterday an article that was published in a UK newspaper, the Daily Mail, on the 5th of December 2000, so 21 years ago. And it was saying about how the internet was going to be a passing fad. It wasn't going to catch on. Teenagers were already fed up with it. Email wasn't going to work, and actually we're going to move on from it. Well, that was rubbish, wasn't it? Because it now rules our lives. I think what will happen is it will be brought into regulation. We're already seeing stablecoins and others, which are at least allegedly tied to underlying assets. Blockchain technology is, I think, going to change the world. It is just a superb way of managing data or digital assets in a pretty robust way. So I'm kind of comfortable with that. At the moment, people talk about money laundering and crypto, and I keep pointing out I have a very small amount of crypto. Not that I'm trying to earn money with it, but I use it as a way of demonstrating the incredible volatility of crypto. So my crypto can change 20%. In a week. I mean, it really, really can. Now, if I'm a money, you need to understand that most high-end money laundering is done by professional money launderers, not by the corrupt or the criminal gangs. Now, if you're laundering money on behalf of let's say, the 'Ndrangheta, which is a major mafia in Italy, or on behalf of a corrupt government, you're not going to risk using something that could lose 20% of its value in a matter of days, because that's a rubbish way of laundering money. Now, you might use the crypto as a way of generating criminal funds, i.e. selling drugs, or actually yesterday we had an article in the UK about firms who are now selling COVID passes on the dark web, and they will take Bitcoin for it. But if I was operating that gang, the first thing I would do when I got my Bitcoin is convert it into something far more stable, because having made my $1,000 or whatever it is, I don't want to see it become $800 overnight, because it's so unstable. So I will take my $1,000 and move it into a stable currency, whether that's a stable coin or something else. So I think crypto is kind of being overplayed at the moment. It's definitely a currency of the dark web. But I don't think it's a currency of laundering money. I just think it's a currency of performing criminal acts.
The transnational bodies, such as, for example, European Banking Authority, they're just discriminating crypto. And so they're just making all national banks just shut down the bank accounts of the companies that are having anything to do with the cryptocurrency. This is terrible because, I mean, okay, the European Banking Authority is doing this, but at the same time, the crypto businesses can open a bank account, let's say in Switzerland, and do the same. And like, what's the logic behind that? There is no logic. It looks like. Well,
I mean, there is some logic, which is the fact that it's a bit like, you know, Turkey's voting for Christmas. The thing about crypto is it isn't a fiat currency. It's effectively a distributed currency. So I can understand the European Banking Authority say, well, how do we control this? We can't. It's not like central banks that we can impose regulations and rules on. How do you impose regulation on crypto? So it is a natural evolution of new technologies that the first phase you go through is rejection, and then you're going to get anger and all of those things before we get to a point of acceptance, and we think, okay, let's just accept this and see where we go with it, you know.
Earlier this year, the UK has once again revisited its list of high-risk countries. Now it's 21 high-risk countries in the world. And I would say, I mean, it's kind of like a bit more than what you can see, for example, on FATF list of non-cooperating regimes, which basically includes just two regimes, basically DPRK, North Korea, and Iran. What's the basis behind this policy of the UK to make this list so large? I mean, it's really large. I think it's probably the largest list on the world. Basically, nobody else has such a long list of high-risk countries.
Yeah, and manifestly it doesn't work because we're still home to huge amounts of dirty money in our property market, and we're not going to turn that away anytime soon. So I think, you know, you'd have to treat high-risk country lists as at least as much a political act as it is an economic one. I think it's no coincidence that since the UK have left the European Union, that list has expanded, because that's a way of asserting our independence. Oh, look at this, we're taking it a bit more seriously. And to a degree, I kind of understand that, because one of the limitations in the EU is you can't put an EU country on it. So it's kind of, you know, and I wouldn't say that every country in the EU is necessarily not high risk. But high risk for what? I mean, that's the other point, is high risk for what? High risk for them being corrupt. But you know, is it? And one of the things I say consistently to all my audiences is you cannot measure risk as a data point. Risk is a network. And if you don't measure risk as in the context of networks and score it accordingly, you are not managing risk. Now, those networks include networks of countries as much as networks of companies. And that means you can't single out individual countries and say, well, they're the bad ones, because that's ridiculous. Bad for what? Because if you had a high-risk country list for receipt of dirty money, we'd be top, you know?
I mean, I look into this list, I see, for example, Cayman Islands, or let's say Panama, and let's say Albania. I don't know why Albania is there, okay. I mean, Cayman Islands companies still work. And I mean, they operate inside the UK. I'm sure that there are companies that are holding other companies in the UK. So, okay, Cayman Islands is on the high-risk list, but at the same time, they can operate in the UK. What's the point then to have this list?
And that's a really good point. I have researched money laundering networks now for 5 years. I mean, deeply researched them. I don't think I've ever found a Cayman Island company inside a laundering network, ever. There's actually not that very many BVIs. There are hundreds of Marshall Islands, Seychelles, Nevis.
Not on the list. They're all not on the list. Yes.
Exactly. So what are we saying is high risk here? Now, what I do know is that when the money leaves those networks, it does tend to go to trusts and other companies in, for example, Cayman or BVI. But that's the destination that then, for example, purchases property in the UK. So you'll find that there are hundreds of companies, hundreds of properties in the UK that are owned by Cayman and BVI companies, but that's a very different measure than money laundering. So the country risk lists are measuring a very narrow kind of spectrum of risk. And I'm not even sure it's the most helpful measure the most helpful risk to measure, rather.
How do you understand this difference between, for example, Marshall Islands and Cayman Islands companies? Like, what is the logic behind, for example, using a Marshall Islands company for one thing, and let's say Cayman Islands for another thing? Like, what's the logic behind this?
Well, I think it's perception. So the thing about the Marshall Islands is they have got a completely secret business register, so you can't get at it. It's quite expensive to have a Marshall Islands company. I think they cost you about £1,000 to incorporate one, and probably about another £1,000 a year. But here in the UK, you can have a thing called a limited liability partnership, which will cost you £12 to create. And you need two, they're called designated members. But what you do is you have two Marshall Islands companies as the designated members. But they can be the designated members for 1,000 companies, 2,000 companies, doesn't matter. And effectively, by creating a company in the UK that's then controlled by companies from the Marshall Islands, you're just creating hundreds and hundreds of offshore companies that look like they're UK companies, but actually all of the control is in the Marshall Islands. That's fine, but trying to buy property with the Marshall Islands companies are very different because there's a different set of rules attached. So you transfer that to a Cayman Island company where for years and years they've operated in the property market, and everyone says, oh yeah, it's Cayman Island, it's a trust or whatever. It just changes people's perception. And money launderers are clever people. They really do know what they're doing, and they know the right entity and the right location for the right part of that process, and they get it right pretty much every time. And even though I know all of these networks, I don't know who is underneath them all. I just know who are the proxies who operate.
I mean, using a jurisdiction where you can have a secret shareholder in your company is a fantastic instrument for money laundering. I know that this is also an option. Actually, maybe I'm wrong, but I remember this had been the fact for Luxembourg or maybe Liechtenstein, something like that. So you can have it. It was. No, it's not like that. Okay, so. But Marshall Islands are not on the list of risk countries.
No.
Why?
That's a good question. I can't give you an answer to that. I genuinely can't. I mean, Luxembourg's a really good example because it did used to have secrecy, and because it's part of the EU, it's been required through the fourth directive to open up its beneficial ownership register. And actually what came out, there was a very big story about the governor of the Bank of Lebanon, who it turns out owned significant amounts of property, and his family did, in Luxembourg, and it couldn't be explained by his earnings from his job at the Bank of Lebanon. Now, I'm not going to say whether he's guilty of any sort of crime, because that's clearly asking for trouble. But that's the point, is that transparency ultimately, and transparency of corporate registers is the only way forward, because until you can see who is underneath these companies, we're just giving them the perfect opportunity to move money around the world secretly.
Another question with this regard, because it's extremely interesting for me. For example, you have an electronic money institution, you have some operations with the UK companies, etc., etc. You have, for example, a bank account, let's say, in Barclays Bank or something like that. To which extent you should honor this high-risk countries list? Like, how it should operate, and like how should it affect your business? Like, should you close these countries for your business? Don't work with them?
Well, that's when it gets complicated, isn't it, Tony? Because EMIs add a different kind of level of complexity, because you can have an EMI, electronic money institution, which is authorised and regulated in the UK, but it doesn't be run out of the UK. And although it may provide you a UK sort code and access to SWIFT out of the UK, that it may be being controlled from anywhere in the world, frankly. And that is problematic for banks, because do you accept counterparty payments from high-risk countries? Where are they coming from? Is that okay? Do you remit to high-risk countries? Is it just about your account and your beneficial owner, or is it actually about those transactions? Well, if we start stopping transactions on that basis, this money will stop moving around the world. So, we really haven't got this right, and EMIs do add a very different flavour, because there's no physical location that you can go along and inspect, pretty much.
Right. I mean, just for example, let's say in London, there are thousands and maybe even millions of people coming from, originally from Iran, for example. They have relatives in Iran, so they need to send money to Iran somehow. And obviously there should be some remittance businesses in London working with Iran, even though Iran is it's not just on the high-risk list of the UK, it's also in the FATF list of the non-cooperating regimes.
Yeah.
But still they work, and it's not a problem to send UK pounds to Iran.
No, absolutely, and that's true of, there's a very large population of expatriate Iranians in Germany, even more in Turkey, because obviously they share a border with Iran. So, and yeah, these people come out of Iran because they need to help, their families economically.
So we have this high-risk countries list, but at the same time, the businesses, financial businesses in the reputable jurisdictions, they work with these countries and they have no problems with that, and they have no problems with the regulator.
No, and that's why, I'm going to go back to the high-risk thing is a political act and not an economic one.
Okay, that explains everything.
Yeah.
Another question related to, again, Danske Bank, we're returning back to a certain extent. I researched your materials and other materials related to money laundering, and I see that the following banks have been engaged in money laundering. It's including Deutsche Bank, Standard Chartered, Barclays, HSBC, Bank of Scotland, Lloyds, Bank of America, JP Morgan, Wells Fargo, Danske Bank, Swedbank, Nordea. All these banks were engaged in money laundering, but at the same time, they're still out there and still working. How does it work?
Yeah. Oh, I mean, Tony, let's be quite clear. There is not a single bank in the world that hasn't been engaged in money laundering. Not a single one. All banks are processing criminal funds all the time. They're the ones who got caught. It's not, it's a different list. Guaranteed, I could walk into any bank if they ever gave me access to their transaction activity. I will find money laundering there, But I just will. I mean, I won't name them, but I did some training for a global bank. And I used to go around the world, genuinely went around the world to their branches, and I would talk to these, and they're intelligent people, and I would say, are you aware of the figure that's quoted for the global level of money laundering as a percentage of global GDP? And obviously, it's about 3 or 4%. Yeah, absolutely. 3 or 4% of global economic activity is criminal or corrupt in origin. What do you reckon that figure is in whatever country I was in? They say, well, it's probably about the same. Yeah. What about for your bank? What do you think? And they'd say, oh no, well, probably it's about the same in our bank. So, yeah. What about your customers, the ones that you personally deal with them? Oh no, I haven't got any criminals. And you say, well, this is amazing, isn't it? Because either there's the one person I've never trained who's going to put their hand up and say, Graham, I've got all the criminals. Or actually you just don't recognise them. And that's a perception issue, Tony.
As I see current anti-money laundering controls, they are kind of like favoring banks. Yes, we can accept this fact that banks are probably the primary agent in money laundering, at least to my understanding, because we can see that most of the banks are engaged in money laundering currently. But at the same time, if you are, let's say, an electronic money institution, you can just basically get rid of your financial license if you're engaged in money laundering. But if you are a bank, if you are a reputable bank, then you're on the safe side. You're too big to fail. Yes.
Yeah. Yeah, and I think there's a lot of truth in that, Tony, that actually the scale of the operation will affect the outcome of those investigations. But I think also, criminals are alive to some of those variations. And the rise of artificial intelligence and bots is quite worrying. Lots of corporate service providers now, certainly here in the UK and I suspect elsewhere, provide a package, which is they will start a company, but they will provide you with a bank account as part of that package. And almost always those bank accounts are with, new payment service providers of whatever flavour. Now that's potentially problematic because payment service providers may operate relatively small sums of money, but I can see it quite straightforward to operate a huge network of companies and those bank accounts through bots and AI. So you just let them do all the transactions. You don't need human beings. So you have what effectively is micro laundering, which you can still move huge amounts of money, but you can do it through having thousands and thousands of accounts with EMIs that are being run through companies and bots. And these companies are effectively burner companies. You're only going to use them for a few months. You start the company, you use it for a few months, and then you just let the company get wound up. You don't care because you're finished with it. I don't think we've got to grips with some of these issues yet. So to go back to your first question, yes, the banks are treated differently, and that's because we understand the scale of the problem with the big banks, but we don't want to shut them down. I mean, obviously, HSBC in America were threatened with losing their license, but actually, they were one of the main dollar banknote processors in America. They can't just shut them off because it would have actually had a disastrous effect on the economy. You can shut down an EMI and it doesn't really make a lot of difference because they haven't got that economic impact. And absolutely that's an issue.
Okay, Graham, last question. Let's pretend you became the head of FCA, your first decision.
That's never going to happen. My first decision would be I would want to get it round a very large table with all the heads of all of the banks and have a really, really frank conversation about what, as a regulator, I want to happen. And what I want to happen is for people to stop managing their financial crime compliance risk and start managing their financial crime risk. Because I think if we take away the fear of breaking a rule, you're much better off genuinely trying to attack financial criminals and you will meet your compliance requirements. I think at the moment banks live in fear of falling foul of a regulator. So my first job would be to establish a relationship with all of the financial institutions to say, let's reframe our relationship, because what we want you to do now is manage the risk of you processing criminal funds. And as long as you can demonstrate you've done that to the best of your ability, we'll accept the fact that you're meeting your compliance risks. But don't obey the rules if it means that 99% of all of the criminal funds still go through the system, because that's stupid.
Thank you very much, Graham, for this interview. It was extremely interesting, and I'm hoping we're going to have another interview and many other new interviews in the future. Thank you very much.
Thanks, Tony. It's really good to speak to you.
That's it, I guess. Cut.
We're cut.